Welcome, crypto enthusiasts. If you're someone who's been closely following Bitcoin, you'll know how much the market can shift in response to economic news. Today, we're diving into an exciting development: Bitcoin's recovery after the release of the latest US inflation data. Over the last week, Bitcoin's price has been on a roller coaster ride, initially dipping and then quickly bouncing back. But what caused this sudden shift? And what does it mean for Bitcoin's future performance? Stick around as we break down the events leading to this recovery and what they signal about the resilience of Bitcoin in the current market. If you're serious about understanding the interplay between crypto and traditional markets, make sure you hit the like button and subscribe for more updates. Now let's get into the details and see what's really driving this recovery. On February 12, 2025, the US government released its January Consumer Price Index (CPI) report, revealing that inflation had increased by 3% year over year, surpassing the expected 2.7% rise. This news caught the market off guard and caused a short-term drop in many assets, including Bitcoin. Historically, inflation data has had a significant impact on both traditional financial markets and the cryptocurrency market. When inflation rises, it typically leads to fears of tighter monetary policies, like interest rate hikes by the Federal Reserve, which can make riskier assets, such as Bitcoin, less attractive. This was reflected in Bitcoin's immediate price action, where we saw the price briefly dip below $95,000 after the announcement. However, Bitcoin has proven to be a unique asset. While inflationary pressures often hurt stocks and bonds, Bitcoin's response is more complex, with many investors viewing it as a potential hedge against inflation over time. And that's what we'll be examining today: how Bitcoin's performance in the face of rising inflation might tell us more about its long-term value as a store of wealth. After the inflation data was released, Bitcoin's immediate reaction was a sharp decline. The cryptocurrency fell to a low of approximately $94,200, reflecting the market's nervousness in the wake of the inflation news. It wasn't just Bitcoin. Traditional markets also showed volatility as investors reacted to the possibility of the Federal Reserve tightening its monetary policy. This initial drop highlights the sensitivity of Bitcoin and other cryptocurrencies to traditional economic factors, such as inflation rates and central bank policies. As inflation rises, the Federal Reserve may raise interest rates to curb price growth, which can make conventional investment options, like stocks and bonds, more appealing than riskier assets like Bitcoin. However, what's interesting about this reaction is how quickly the market started to recover. Within hours, Bitcoin began climbing back up, signaling the resilience of the crypto market. This quick bounce suggests that many investors see Bitcoin not just as a speculative asset, but as a potential store of value in times of economic uncertainty. Despite the initial downturn, Bitcoin's recovery was swift and impressive. Within hours, the price surged back to around $96,000, showing the market's remarkable ability to rebound. This kind of rapid recovery is a clear sign of investor confidence in Bitcoin's long-term potential, even in the face of short-term economic disruptions. What's driving this recovery? Many investors see Bitcoin as a hedge against inflation, viewing it as a safe haven when traditional assets falter. This idea has been gaining traction over the years, with Bitcoin's fixed supply and decentralized nature positioning it as an alternative to fiat currencies that are subject to inflationary pressures. As the market recovers, it's clear that investors are becoming more resilient to short-term fluctuations. The sentiment around Bitcoin remains largely positive, with many believing that the current economic environment, marked by rising inflation, could further strengthen Bitcoin's role in the financial ecosystem. Rather than reacting with panic, Bitcoin investors are holding firm, betting on its long-term value proposition. This shift in mindset is significant. It suggests that Bitcoin is no longer seen merely as a speculative asset, but as a core component of a diversified investment strategy. One of the main reasons Bitcoin's recovery is so interesting is its growing role as an inflation hedge. As we've seen over the past decade, Bitcoin has proven itself to be more than just a volatile asset. It's increasingly being viewed as a potential store of value in times of economic uncertainty. When inflation rises, fiat currencies lose their purchasing power. Traditional assets like gold are often seen as safe havens during inflationary periods, but Bitcoin is starting to take on a similar role. The key here is Bitcoin's scarcity. Only 21 million coins will ever exist, and this fixed supply makes it resistant to inflation, unlike fiat currencies that can be printed in unlimited quantities by central banks. In fact, many institutional investors are now adding Bitcoin to their portfolios as a way to protect their wealth from the effects of inflation. Major financial firms like MicroStrategy and Tesla have bought substantial amounts of Bitcoin, signaling their belief in its potential as an inflation hedge. As inflation data continues to fluctuate, more investors are likely to turn to Bitcoin for its ability to preserve value in an unpredictable economic landscape. As the U.S. Federal Reserve continues to monitor inflation and consider adjustments to interest rates, Bitcoin's relationship with traditional financial systems is becoming more complex. While Bitcoin is decentralized and operates independently from any government, the Federal Reserve's policies still have a significant impact on its price and market behavior. In recent years, there has been growing discussion about the potential for Bitcoin to coexist alongside traditional financial systems. The increasing acceptance of Bitcoin by institutional investors, along with its potential role as a hedge against inflation, signals that the crypto market is maturing. As the Fed raises or lowers interest rates to control inflation, the market's perception of Bitcoin's value shifts. However, the beauty of Bitcoin lies in its ability to adapt. While short-term reactions to inflation data and Fed policy shifts may cause volatility, Bitcoin's long-term prospects remain promising. The continued integration of Bitcoin into global financial systems, combined with growing institutional adoption, paints a picture of a more stable and established asset class in the future. For Bitcoin to truly fulfill its potential as a store of value, its relationship with central banks and global economic policies will need to evolve. But the current trends are a promising indicator of what's to come. Looking ahead, Bitcoin's future in the face of inflation and economic uncertainty remains uncertain, yet promising. With rising inflation in the U.S. and global markets, many investors are turning to Bitcoin as an alternative asset class that could offer protection against the erosion of purchasing power. This trend could strengthen over time as inflation pressures persist, making Bitcoin increasingly attractive to both retail and institutional investors. One factor that could play a significant role in Bitcoin's future is its growing integration into the financial mainstream. More companies are accepting Bitcoin as a form of payment, and institutional adoption is at an all-time high. As more people begin to use Bitcoin for everyday transactions and savings, its utility and value could continue to increase, further solidifying its position as a hedge against inflation. Additionally, Bitcoin's decentralized nature provides a layer of protection against economic instability and government interventions. Unlike fiat currencies, Bitcoin cannot be printed or manipulated by central banks, giving it a unique edge in uncertain times. While volatility will always be a factor, Bitcoin's potential as a long-term store of value is becoming more widely recognized. As inflation continues to rise and economic uncertainty looms, Bitcoin may prove to be one of the most resilient assets of the future. If you're finding value in understanding Bitcoin's role amid inflation and economic uncertainty, don't forget to hit that like button and subscribe to the channel for more insights. What are your thoughts on Bitcoin's future? Do you believe it will continue to thrive as an inflation hedge? Drop your thoughts in the comments below, and let's discuss. Stay tuned for more updates on the world of crypto and economics. In conclusion, Bitcoin's recovery after the recent inflation data release highlights its increasing resilience and growing acceptance as a long-term store of value. While the initial reaction to inflation data was a drop in price, the subsequent recovery underscores the confidence that many investors have in Bitcoin, not only as a speculative asset, but as a hedge against inflation and economic instability. The relationship between Bitcoin and traditional financial systems, including the Federal Reserve, will continue to evolve. The Federal Reserve's monetary policy decisions, such as interest rate changes, will undoubtedly affect Bitcoin's price in the short term. However, As more investors recognize Bitcoin's value in preserving purchasing power over time, its position in the global financial system will likely continue to strengthen. Bitcoin's future looks bright, with rising inflation and economic uncertainty, making it an increasingly attractive asset. As more institutional investors and everyday users adopt Bitcoin, its role in the financial ecosystem will only expand. While challenges remain, Bitcoin's potential to act as a hedge against inflation and a store of value is undeniable. As the world continues to navigate economic turbulence, Bitcoin's role as a safe haven could become even more crucial in the years ahead.